Well, we have a lot of developments after hours and we have some earnings to go over as well, but we should really just hammer out the basics and just look at what's happening. So we take the August 5th level, we have to go through the NASDAQ the same way, and we can just take a look right here. If you use the wicks, this is where you're at. Some people don't like using the wicks and want to use the bodies. I get why to do that because the bodies are what? They don't have the price rejection. Wicks are what? Price rejection. And you can see how that fits in there really nicely. And you can see those levels from there. I don't really care which one you use. Either way, you broke either one of them. The question is, are you going to continue to break, or are you because you broke the intermediate one, or how about that long-term one? How's that going? Well, no matter how you look at it, you broke it today. Now, whether or not you get above that or you don't get above that remains to be seen, but you have broken that. Now, if you want to play devil's advocate and you want to say, I just want to use the body, you broke a long time ago, and you can see that there. No matter how you look at it at this point, the one thing we can all agree with is that trend line on the futures market, hands down, is broken. Now, if we do the simplest of things and just overlay this on a 15-minute and look at what's going on, the 22 is pointing down, the 55 and the 100 are pointing down. This is the CPI from July, month over month, and PCE data was released in the December contract roll. You cannot get over it. No matter how you look at it, you're not getting over that. And I think that's really important. You're hitting it, and then you just got completely, utterly rejected. And based upon the news that we're going through, you'll understand why that happened today in a second. But I do think there's some important developments here. And one in particular, we're going to look at relative strength. But let's get to the basics. So you have the 22 and the 55 that are pointing down. If I put a VWAP here, which we don't need to because you already know by looking at it, you're below the high VWAP. So it's kind of pointless, isn't it? If I put a VWAP here, you're going to be able to tell that we're already below that because you can tell by the average. So let's not waste our time. Let's just get to the facts. This PCE December contract roll hit, rejected, tried to get over, can't. So this line here, just so we're all clear, that is the 200, the 55, and the 22. That's what I have on this chart. You should use what you're comfortable with. This is getting to a point where you're starting to see a level of capitulation. Now, you can look at it a couple different ways, but the easiest way for me to look at this, go to a 4-hour, and you can just see how ugly this was. And you can see the break. I want to be really clear about this. And what we should probably do is clean this off and just look at the break for a second so that we get it. Peak, neckline, broke. Retest, failed. They're the facts, guys. No matter how we want to look at this, no matter how much we want it to go up, no matter how much you want to say the bottom's in, right now you are technically broken and you have a lot of work to do. It doesn't mean that you're still going to go down. It doesn't mean that you can't go up, backfill, rebuild, and go. But you have some work to do here. So we really need to keep this in mind. Now, if we are to look at this and understand where we're at, then you can go forward. And I'll give you an example of what I mean. The first thing is take a look at the RSI. And you start seeing these divergences here in the RSI. And that is telling you that you have come a little too far, too fast. Whenever you have these positive divergences on 4 hours, anything greater, like 4 hours or greater, you really want to pay attention. You're starting to get them here. Candidly, I thought you had it the other day. You have one more leg down. That was today, and you can see how quickly you snap back. And what this does, RSI, for those that don't know, it charts the magnitude of the move. So when you think about it that way, it's way more helpful. But really what we're focused on here, what you should be focused on here, is the fact that this is pretty much at that trough level. I'll tell you the easiest way to look at this and figure it out. If we took the Qs, which you can see here, and you see that on the 4-hour. If we took the Qs and then we took the SPY, for example, and you can see how the SPY looks. And you can see the difference between the SPY and the Qs. And I'm going to tell you what I think they're going to do. I think they're rotating out of the S&P and into the NASDAQ. And there's a couple reasons that I think that. But this is pretty much the easiest one. If I take the Qs and I put that here, and then I turn this Q into a line for a second, we'll take this off the screen and we'll drop this down to a 1 minute. We'll make this SPY right here. And then we'll just click on both of those. And they both look the same, right? And then you go here to the 4 and to this the 4th. And then you look and say, well, wait a minute. NASDAQ outperformed the S&P today, right? We can still see this. I mean, everybody sees that. Clearly runs up, down, what sold off more, Qs. Which names that are my swings did I get hurt the most in? S&P names today, not the NASDAQ swings. Now, if I took this and I went 5, and I went back and I just went through any period of time, and what we'll do is we'll just take from February over. Well, we can actually go from January over and look at that. What are you going to see? You're going to see the S&P is outperforming. And then it doesn't really matter what time frame you do this. If you go and take a look from February on, you're going to see the same thing. And then when you start to drill into this, and you start going day by day by day, what do you see happening? Well, you still see the S&P outperforming. What happened today? So we're starting to get that first turn here. And this is a sign. Whenever you start seeing like risk on, this becomes a sign. The other way to look at this before we get into all the things that we have to get into is you just turn this into a line. And what this does for you, and we'll get rid of this real quick, what this does for you by turning it into a line, it just gives you an understanding that are the Qs outperforming the S&P? If they are, it will go up. If I took a look at this and dropped it on a 15-minute and then just zoomed it out, well, it's pretty clear what's been going on. And then you would just go look at February, and then the Qs were rocking, and then we fell off a cliff. Now, take this, and then you just turn it into candlesticks, if you like, and then just look at the top of this and what's transpired here recently. Take the high of this peak, take the high of that peak, drop a line down, and what do you have? You have a trend line that broke, and now you just need the first higher high. Ding, ding. What'd you get? The first higher high. You tested it, maybe you hold, maybe you don't. I don't know, but it's a start. And that's what we're dealing with here. You can also just throw an RSI on there and say, do you have a chance? Do you not? Maybe you might have already been overbought, but you are seeing signs of that, and I think it's important. If you look at the relative performance of these two and you put an RSI on it, it's pretty darn close that NASDAQ is getting set up to start outperforming the SPY again. What is this telling you? You could use this as nothing more than you don't have to be in either of these, but you could literally use what I just showed you as risk on or risk off. Do I want risk on or do I want risk off? I went through this the other day too, another way to use it with the 55. You can watch that video on your own. We have a lot to go over. Before I get into the VIX and how to use it correctly to what happened today and some of the names that are moving after hours, we need to get into all this data that came out at the close because it is changing and it is moving some stocks higher after hours. It's moving the equity markets higher as well. So let's get to it. Now, as you can see, everything around tariffs is developing extremely fast, but let's just get to the bottom line here. U.S. Commerce Secretary Lutnick, if USMCA rules are followed, Trump is considering relief. This is at 4:11 right after the market closes. And then the hits just keep on rolling, 4:14. We will see tariff changes by April 2nd with Canada and Mexico. If USMC rules are followed, he's considering relief. There it is from 6:11. And then we just keep going. By 6:19, tariffs compromised announced is likely tomorrow. So within 7 minutes, the Commerce Secretary is actually getting information this fast himself, and he's relaying it to the American people. Trump is set to move with Canada, but not all the way. 6:18, 6:19, 6:21. Trump may roll back Canada and Mexico tariffs tomorrow. Trump is considering relief. Tariff compromise announced likely tomorrow. Trump is on the move with Canada and Mexico, but not all the way. You see how fast and dynamic this is moving? And this is what I keep trying to explain to everybody. Not just globally, and rather not just in the US, and I could show you the US as well, but just global economic policy uncertainty index is at highs that we have not seen since the pandemic. We're over it. There's more uncertainty globally now than during the pandemic or during the great financial crisis. This is causing massive swings in the market. For me, that spells opportunity because what happens is they throw the baby out with the bathwater with this stuff. But we have to understand what's going on. We can talk about the Atlanta Fed GDP and what's going on there. We could talk about all this stuff, and it's here and it's real. We discussed this yesterday that the Atlanta Fed real GDP estimate, and the way to read this is they use 4 different components. Those components are weighted when they come out. If one does not come out, they just weight the other one heavily, and any revisions they don't look at in their equation. What does that do? It leads to massive volatility in the Atlanta Fed. But direction and speed are taken with a certain level of importance. And quite frankly, when this drops, the blue chip companies, the investment banks, they do drop their GDP. It does follow in line. Not at the magnitude. You'll see the light blue change one way or another. And most firms did take down GDP. But this has fallen off a cliff. Why? Well, net exports have literally fallen off a cliff. So we've gone from, just so we're clear on this, from the 25th, Atlanta Fed was right around that 2.3, and now they're down to negative 2.8 in roughly 72 hours of business of being open. So it's kind of crazy. I can't really remember another time we saw it drop this fast, and it's raising everyone's attention. The bottom line with it is it can snap back just as fast if he just goes ahead and gets rid of these tariffs. I do think you're going to see a certain amount of cause and causation with his actions now. I think people are going to be more prepared. And we're seeing that in some of the stocks. And we'll go through areas that you might want to pay attention to. But as I was saying, you can see it here with the U.S. Economic Policy Uncertainty Index. All-time highs. Great financial crisis? Merely a flesh wound. Pandemic? 3 weeks into a new administration, all-time highs. And this is just the US, and I wanted to show this for comparison. Now, if you were to invert this and say, give me an indicator that tells me that you're at a long-term bottom in the stock market, there's the great financial crisis, here's the pandemic. If you were to inverse this at any of these times, and you bought stocks, how'd you do if you held for 3 to 5 years? Pretty darn good. So it's going to be kind of interesting to see how this one plays out. And I will say this, no one has a clue. So all these people and all these investment banks telling you, oh, we're definitely going into a recession or we're definitely going to stagflation. He just put tariffs on 2 neighboring countries and he's talking about taking them off in 24 hours. And you're going to tell me you know what the recession's going to be or the inflation's going to be or what the bond market prices are going to be tomorrow? This is leading to massive volatility. We are seeing signs of that peaking. And of course, we do have a speech tonight, but I do want to go through something else that I think is really important and adding to all this uncertainty. Now, as we all know tonight, we have Trump's speech for 2025 tonight to address Congress. I believe it's at 9, and the president shortly addressed 9. Time remains to be seen, usually runs a little bit late. Last time went an hour. Who knows how long this goes, but I think there's some real interesting things here. I was going to walk through that position, but we're not going to. We'll go to this, and we'll work backwards. Treasury Secretary says there's no longer signing plan for a minerals deal with Ukraine. Now, this happened after the market, but 3 hours ago, Reuters reported that Trump and Zelensky are going to sign the deal today, set to announce it at the speech, but that's not going to happen. And then you go to the headlines. Zelensky vows to make things right with Trump and negotiate peace. This was 3-4 hours ago. Ukraine is still ready to sign the U.S. mineral deal, he told BBC. Literally, I believe it was 3 or 4 hours ago. And so you look at something like this, and you wonder why you're at a negative 2.8% GDP. And then at the same time, you're looking at this, and this Treasury Secretary has no idea what you're talking about. And what's crazy about this, that's one secretary of one department. Then you go and look at the Commerce Secretary, and you look at how this stuff is coming out. And it's literally like someone is telling him every single minute an update on what the president is actually going to do, and he's relaying it immediately. And what this is doing is it's making this volatility just absolutely through the roof. And I don't think that's going to stop for another 30 or 40 days. I do think we'll get used to it, and there are signs of that here. Let's take a look. So all this volatility and these kinds of turns, what this is leading to is the ability of optionality. And I don't know another way to explain it except to show you what I mean by this. You want the optionality with your trade so that you can make a decision on what you think is going to happen. And the easiest way to do this is to give you an example. So take this Tesla, for example, and I'll show you what I mean by this. I'll clean this all off. And this is going to have to stay raw and unedited because I have a lot going on and I'm not going to have time to edit it. They make fun of me when I say that. They actually send me memes that have that guy, the Flex Seal guy, saying it. I don't have time to edit. Anyway, so today I wanted to short Tesla. But what I want to do with these kinds of names is withhold my option. So people would look, well, why would you want to short this? Well, no one knew this was going to happen. And by the time this happened, people were going long in the community and they absolutely killed it. And you can actually see the change in trend right here. I mean, you can literally actually seeing it play out like right here on these moves. So whenever anyone says to you, RSI doesn't work, you can just screenshot this and send it to them. But you don't even have to say anything. But if you look at how this played out, you rallied up, you could not even pop to the high. A lot of these things gap fill today, and they presented excellent opportunities. What I would say, number one thing I want you to take from this video, if you are not moving and marking the previous closes of these trades during this particular kind of trading, you're doing yourself a huge disservice. Because people that are trapped, you want to see how they act when they have the ability to get out. And they're telling you what they had the ability to do. They could Amityville Horror here, and they exactly did just that. Now, what does this do for us? It tells us a couple things. One, it tells us they went out, and now we're seeing it bid up. And we're bidding up tonight because we probably don't have tariffs by tomorrow morning, and we have a State of the Union, or maybe we'll have double tariffs. But, you never know. Whatever's on the bingo card for tomorrow. And we'll go from there. And I hate to be that cavalier about it, but it's absolutely insane. What we're dealing with right now. It's never been there, and that's why those uncertainties are. And that's why optionality is so important. So with something like this, by marking the close and the low, you can see exactly what's happening. Even the people that bought there at that low, they're like, yeah, that's enough, we're gone. And they're getting out, they're like, that's it. So when this starts to happen, it sets me up, and it's allowing me to look at this and say, okay, there's a possible trade here. But it's early in the day, and the thing that gets me about shorting this is, if you sneeze or somebody sneezes on a 1 minute bar, I could be up $3, $4 and they could just be wicks and go away. So I want to see areas of interest. Now, to me, this open was a huge area of interest. So all I had to do was just allow it to work. And so what I'm doing is I'm allowing it to break, and then I'm looking for the retest. And when I start getting that retest in here, what I'm doing is I'm shorting those rallies into that retest. And then I'm just using like a 1 or 2 minutes. And then if it reverses, great. If it doesn't, it's going to cost me $1 to get out. So I'm using the positive slippage that the algorithms and high frequency traders are using against them to enter the trade. That's when people always say, oh, you can't do this stuff because of the high frequency traders. All you have to do is realize what they're doing and then just do what they're doing. All they're doing is just doing liquidity grabs. So you might as well do it too. Like, why wouldn't you? It's kind of silly. That's all they were doing here. Liquidity grabs. And then you can see what they did with that liquidity. I mean, it's pretty obvious, right? I mean, when you start to get it and see like all the wicks up and then you're down, all the wicks up and you're down, it's not rocket science. Wicks down, it stops. I mean, it's pretty clear what they're doing, right? Anyway, so as you can see, they're grabbing and grabbing. So when this starts to happen, I just set my level. My level is my level. I make sure it closes over there. And then I go from there. And then as it drops, I can pull money out. But what you're doing this whole time is you're understanding I could get a statement any minute that we're going to have triple tariffs, double tariffs, mineral deal, not a mineral deal, a coalition of the willing. We don't know what you're going to get. And so because of that, you really have to have the optionality of I want to stay short, I don't want to stay short. And this is really difficult for people to get because people will say, oh, I'm a swing trader, I'm this. You should define yourself by whether or not you make money, not by the style, because styles should change with the way the market changes. If you're a swing trader right now and that's your thing, you're getting destroyed. And anyone that tells you they're not they're just not being honest. But you want the optionality for when it turns, like it turned here, for example. Some people were able to buy this and then stay in that trade by just moving the stops up to those little, what we refer to as like LPIs. I mean, it's pretty simple, right? But what we did here was just put the short on, allow it to work, and then we had the optionality, and then I discussed the optionality while I'm doing the trade. Just take a look. I'm watching this to short. I'm going to watch that right there. Maybe we can hit this and reject. See the rejection right here? Like, I'll short that, and then what I just did, and then I just use the high of that bar after it closes in 20 seconds. Because I went over to get people in, and then I just allow it to close. Now, if that goes over within that period of time, even within the minute, I might close it, I might not. I'm literally in for $1, up $1 and change, trimmed. Again, if I get over that bar, I'm just going to close that Tesla, but I also don't want to get flim-flammed like that. That means I just have to allow it to work. If I was concerned about that bar, see how it just dropped back to like my cost? All I got to do is just go boop and pull out a little money on that like little move. If I get a little move down, like that, when it just jukes down a little bit, I just pull out more money. And it allows me to stay in the rest of the trade using that as a stop. Now I can't lose money on that trade. Even if I got stopped out here, I can't lose money. Now, if I want, I can just pull out more money, right? Over and over and over again. Just biding time, pulling money out. And now here, not only can I not lose money, no matter what happens, I make money. And that's all I have to do for the rest of the day on that trade. I can literally leave that on now and do nothing else. No matter what happens to the rest of the day on the Tesla, it doesn't matter to me. I cannot lose money on the trade. Tesla, well, now I'm up $8. If I want to take it, I can. If I don't want to take it, I don't have to. I could drop the stop down to another HPI if I want to, like right here. I could just take it if I wanted to. Now, I hope you found that helpful. I plan on doing more tutorials, like full-blown tutorials. When we look at these names, what do we really see? I don't know what you're going to say about this stuff. Are you going to say that we're not done or we're done? Is that it? Dojis are signs of uncertainty. Is it over? It's really kind of crazy. And I want to show you this before we go any further. And it really is crazy to me because if I take this August level and go here, we can all see the break. We can all see that. But if I go here on the NASDAQ and I come back to this November level, and I take the top of that and I draw this line across, you hit perfectly. And then you take the 200 and you're right there with it. And on top of that, there's more to it. But wait, there's more. Right to here, and you get the top of the H from that August 5th drop. All this convolutes and ties right in here. What I really like about this level, before we go any further, is that's a doji. Dojis are signs of uncertainty. I would prefer a smaller doji there, but that's what we have to deal with. So when you have a long-legged doji like that, don't tell it what it's going to do. What you do is just trade what happens. When that makes a decision, you're going to know which way the market's going. It's really that simple. Just use that doji and go from there. Now, after hours, we had a couple developments. The earnings were decent, but what they did was they came out and said that guidance for next quarter is going to be lower because they're going to front load it for costs, and nobody wants to hear that right now. They want them saving their money, so the stock is down at 357 from that 390 close. I thought it was a good quarter. I understand what they're doing. Nobody wants to hear it when you're supposed to earn 97 cents and you're coming in at 64 that you're going to spend more money. Nobody cares. No one cares about your special hopes and dreams for your corporation when this is going on in the market right now. With this level of volatility, they want you to preserve cash, so they're going to hammer the stock. CRDO I thought was good. I really don't understand why it's not up. I'd watch this one tomorrow. I think the earnings were really good. I thought the guidance was really good. And this is really what we have. If we go and take a look at some of these other names that I say, I don't really have anything out there that's crazy. I mean, I thought Ross Stores did very well, and we'll go from there. But I do think it's really important to get a couple things. Tomorrow you have some names that are going to come out, and they'll move, like Arete. Like people, the little guys love playing this one for whatever reason. I don't know why. Abercrombie and Finch has been straight selling, 45-degree angle, institutional piling out since this event. I think that was when they were being investigated, maybe? Wasn't that the date? Some kind of investigation, or maybe it was back here when they were being investigated. Anyway, they got news about it here, and since then you're down about $30. So you have some real issues here with the name, and tomorrow you might get some clarity on it. And then, of course, tomorrow night you start getting into the Marvels, and then we're setting up for AVGO. But Marvel actually held well today. You sold down at the end of the day, I think, because of several different reasons. But the bottom line is you're going to have to watch what happens tonight. Now, the State of the Union, they're saying he's not going to talk about crypto. I don't think I don't know that he's not going to go off script. You never know. But I do think it's interesting that MSTR here has spent the last 3 days trying to break the 200-day moving average, and it can't do it. It might be worth watching this tomorrow and seeing how this acts. The other one that I thought was really fascinating that just ran up on everybody today from those low levels after the undercut at 192, after the gap fill. And it really seems like that's what these things are doing more than anything. Is like they're gap filling and holding those levels and then trying to get to the 235. But MSTR looks better. NVIDIA definitely had a bid today at the end of the day, and it's bidding up after hours, up about $3 after hours. So we'll see how this goes as well. That is it.